Okay, folks, it's a much more interesting week we've got this week with some more potential opportunities. Looking forward to going through it. Now, with the calendar, one issue we have at the moment this morning is we haven't got the minimum and maximum expectations for some of the data points. I am working on that and we will get that sorted at some point during today. However, for now, just bear in mind that we haven't got the minimum and maximum expectations. But with all relevant economic data points, I will have a preview and I will have minimum and maximum expectations up for that preview. So don't worry, we'll be on top of it. However, that doesn't stop us looking at the big picture and overarching narratives and themes, and we can spot where the best opportunities are likely to be. So we just had the Swiss inflation data. That is significantly lower than markets are expecting. It's also below the market's minimum expectations, although it isn't marked on this chart. So that takes all the pressure off the Swiss National Bank. The Eurozone inflation was also sharply lower last week, so that keeps the inflationary pressures off the SNB from its trade partners as well. So all of that just means the SNB is much less likely to be hiking interest rates, and we should see that sort of weakening the Swiss franc around the edges. We took a dollar Swiss franc trade, short-term bias in the R1, took profit there, and then looking for potential pullbacks as buying opportunities at the moment, as long as the dollar remains strong. Some folks took a Swiss franc yen short, which again is a very sensible move with the yen strength we've been seeing overnight. Looking forward, the next major data point is the RBA interest rate decision, which is coming early Tuesday morning. Now, this is interesting because markets have been expecting the RBA, if you just look at short-term interest rate markets, what you'll see is that markets are expecting 97% chance of a hold, only 3% chance of a hike, and expectations were dropping from last week when we saw the monthly CPI indicator coming in low, came in at 4.9% last week, and that was below what markets were expecting, in line with the minimum expectations, and that took the pressure off the RBA. Now, Governor's Bullock has said from the RBA that there is sort of service-based inflationary pressure in the economy. So what I'm looking for here is, we're expecting it to be on hold. That's fine, but I'm looking for the communication to start to be a little bit more hawkish. So say we do get more hawkish communication out of the RBA, an Aussie dollar Swiss franc upside bias doesn't look unreasonable with that weak CPI print. So Aussie dollar Swiss franc upside, as long as the risk sentiment remains, if it's not massively positive, at least it's not completely negative. If it's completely negative, you're going to see Aussie dollar weakness and Swiss franc strength, which would be the exact antithesis of what we would look for, which is an RBA hawkish hold or hawkish communication to lift the Australian dollar against the Swiss franc. Do see the earlier macro trade idea there. But otherwise, if you get hawkish communication from the RBA, look for upside in the Aussie dollar. Could trade it against the New Zealand dollar. That's not a bad currency pair to be trading the RBA and RBNZ central bank divergence. So looking at that would make sense, particularly with the short-term interest rate markets. Pretty sanguine with New Zealand's interest rate decision last week, seen as a more hawkish outlook, with the official cash projections being revised higher out, 2024, 2025. That lifted the New Zealand dollar, but short-term interest rate markets weren't seeing as particularly hawkish. So Aussie New Zealand dollar upside wouldn't be unreasonable on a hawkish RBA. Then going through the session, we got some ISM and PMI prints. These are the final prints for Eurozone and UK, not expecting much from that at all. However, the ISM services data that we do get in the US session could be much more interesting. And we'd look for something ideally far above market's maximum expectations. That should see some dollar strength, and that should see some equity downside. So ISM services PMI coming in hotter than the high expectations. They're not there yet, but when they are there, that's what I'll be looking for. And I expect dollar strength and equity weakness. That will be a definite trade opportunity to be looking for on that ISM print on Wednesday. And also at the same time, we've got some JOLTS job openings as well. Does sort of help set the mood for the US labour market. So again, if you see an on aggregate beat, you want to see all these in a sea of green, that I'd look for dollar strength to be the best opportunity. Pushes back against some of that recent dollar weakness, the Fed's finished hiking interest rates, etc., etc. Strong print here. would be the best opportunity. Could see some dollar strength. That's one to watch. Also got GDP data out of Australia. Now, that isn't, again, another opportunity. You have to read it in light of the RBA interest rate decision. If the RBA are more hawkish and this GDP comes in higher than markets are expecting, markets have been expecting, a drop in Australian GDP, but Governor Bullock said that it has been stronger than expected over the first half of the year. So although they're expecting it to fall to 1.8 from 2.1, Bullock sort of said, it's been stronger over the first half. So if you do a surprise for Q3, look for that to lift the Australian dollar. That would be the best opportunity. Aussie dollar upside on a surprise, definitely not one to miss. Then looking into the Canadian interest rate decision. Now, the Bank of Canada is expected to keep rates unchanged. And Governor Macklem has recently said that rates may now be restrictive enough, and that's helped support expectations that the Bank of Canada has finished its hiking cycle. So what we're looking for here is maybe a clear indication that the Bank of Canada will be looking to cut interest rates. If you look at short-term interest rate markets, they're pricing 100 basis points of rate cuts now into next year. So expecting, cut April, cut summer, cut September, cut December, right? So that's quite significant. But we haven't had that communication clearly from the Bank of Canada. So what I'm looking for here is some kind of communication from the Bank of Canada which indicates that they're looking at rate cuts. And if we see that rate cut, I wouldn't be surprised to see the CAD weaken. Okay, so if we had a hawkish RBA and a dovish Bank of Canada, then you could look for potentially Aussie CAD upside. Wouldn't necessarily be unreasonable. Okay, so look out for the Bank of Canada interest rate decision. We could start to see a bit of more of a dovish tilt coming from the Bank of Canada, and that would likely weaken the CAD. Going through the Wednesday data, got ADP jobs data. Now, that's not going to change the outlook much for the dollar, but it could set the mood, right? So a really strong jobs print there sets the mood for Friday's non-farm payroll. ADP is not very good at projecting what the non-farm payroll data will be, but it does set the mood very well. So strong ADP jobs data likely to lift the dollar. Look for that. Could be a short-term opportunity. Definitely worth looking at. Then going into Thursday, we've got the initial jobless claims. Got some GDP data out for Eurozone. That's just expected to be weak. So obviously if it was much higher than expected, that would likely lift the euro in short-term relief. But the broad outlook is that Eurozone's heading towards a recession. Jobless claims, that will be important. We're looking for now we have got the minimum maximum consensus here. If we see initial jobless claims coming in below 208, continuing below 1839, then that's good news. And so for the labour market, that is, and you'd expect dollar strength. Okay, so this below market's minimum expectation. So a strong job market, look for dollar upside, look for equity downside. The opposite is also true, but less conviction that if you saw this coming in very high, so high joblessness, initial jobless claims above 237, continuing jobless claims above 1,900, that's more negative, and you'd expect maybe some dollar selling, maybe a little bit of equity upside. Have to look nearer the time to see what the sentiment is. Best opportunity would be on a high print. Bank of Canada speakers, they're worth looking at in light of the interest rate decision. Okay, so they could tweak, nudge the market's reaction to the interest rate decision, and you could have a short-term trading opportunity there with the Bank of Canada speakers, Governor and Gravel, Deputy Governor, speaking at 5:30, 5:40 UK time on Thursday. We then have on the Friday the big data, which is the US non-farm payroll. Now, the recent drop in jobs, that 150,000, started this big solid dollar sell-off. Really, arguably, you could say it was Powell the midweek who started that dollar sell-off, but it was this that sort of really cemented a dollar weakness when we had that weak jobs print 150. So if we see another weak jobs print coming in below 140, right? If it came in below 105, that would be the lowest jobs print for this year. And if it was negative, then that would be really negative for the dollar, and you expect significant upside in gold, for instance, because the unemployment is starting to rise. So you see unemployment rising, weakening of the labour market, jobs showing weakness. And so what you're looking for here is you're looking for that to continue, right? So if that continues, unemployment above 4%, non-farm payrolls but below 140,000, and as long as these are misses, then look for more dollar weakness. You could look for maybe gold might try to really take some strong advances. Okay, that big breakout we saw gold early Friday Asia session to start the week, right? That could really rip if we saw a big miss here. Now, also, if this came in super strong, jobs came in 230,000, unemployment sub 3.8, and then the rest of the metrics also showed strong data points. You know what I mean? The hourly earnings, coming in well above 0.3%, weekly hours, coming in higher. If we saw that, then look for dollar upside, equity downside. That would definitely be a potential opportunity because it would push back, you see, against some of the Fed's done hiking narrative. So a lot of different little opportunities, short-term opportunities, really. Best opportunities would come for something that pushes back in the US against the Fed's finished hiking. So strong US labor market, strong jobs, strong data out of the US would likely support the dollar and push back against some of the recent moves. So that's something to keep your eye on as we move forward. Okay, folks, that's all for now. So that's don't forget, we will have the minimum maximum expectations up for the individual data points as we go through the week, and I'll make sure we get that data down for us.